there's one stock that would remain in focus and much more important, and that is the Paytm buyback announcement that has come in. Now, a few details about the buyback. Firstly, now the buyback will be through an open market route. The maximum buyback price set by the company is 810 rupees, and the maximum amount that they're going to utilize for this buyback will be 850 crore rupees. However, given the fact that the current market price is still lower than what the maximum buyback price is, the number of shares that the company can actually buy back is much higher than what they have anticipated, and that could be around 1.6 crore shares. That is nearly 2.4% of the total shareholding. Also, given the fact that the company's key managerial person and directors won't be participating in this buyback, this could actually increase the percentage and could go up to around 3% of the total shareholding if they don't participate in this buyback. Now, given the fact that it's an open market buyback, the shares will be bought back at the market price, which is lower than the maximum buyback price, and the cap on this buyback price is kept at around 810 rupees. Now, also the buyback size is less than 10% of the net worth, which means that the shareholders' approval won't be required. And however, so far we do not know the buyback start date, but usually whenever it's an open market buyback and a shareholders' approval is not required, it can usually start within the next 10 days of board approval. Now, there are few important messages that the company had given in their release. Now, firstly, they said that the company's directors and the key management personnel will not sell any shares in this buyback. The second message that the company gave is that the buyback is a sign of confidence that the company is on a clear path to deliver cash flow profitability. Now, the buyback will also not have any impact on the company's growth plans in the near term and its profitability plans. And lastly, the most important line that the company said was the company is ahead of its plan to achieve the adjusted EBITDA profitability. Now, earlier the company had given a guidance of achieving this number by the second quarter of FY24, and as you can see, in the second quarter of FY23 itself, the company's adjusted EBITDA losses had come down to around 167 crore from 274 crore rupees reported by the company in the previous quarter, and this means that the company is clearly on its path to achieve this adjusted EBITDA break-even. And they had earlier given a guidance of Q2 FY24, but the company could actually achieve this well ahead of its time, and that's what the company has said in this buyback announcement. So do keep an eye out for Paytm, though the company is choosing the open market route and not the tender route, but the company might have done this to see to it that they can actually buy back more number of shares than what they would have actually done had it been a tender route.